Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So everybody guys, let's take a look at the gold market. As usual, we'll do now a second video. So overall situation on the gold market stands even more sophisticated than on the Forex. And the problem stands here, this tricky moment, that market gradually, week by week, increasing the chance on the pullback, because already the overall speculative position on the gold market stands on record highs. The market is coming and passing for the strong targets and levels on the monthly chart, and it's coming to even stronger levels of monthly overbought and major 618 resistance on the monthly chart. So the chances and the probability of the retracement is growing. But at the same time, on the daily chart, we do not see clear bearish signs. We do not see the signs of the reversal, which makes us think that market could proceed slightly higher. Next step to the target, next step to the target, and it's coming by week by week. So that's the problem. So from the one point of view, we can't take some longer-term bullish position on the market due to the near standing of the overbought and due to overextension of the position. But at the same time, we can't take the short position because we have no reasons for that. Markets doesn't form any clear signs, clear bearish reversal patterns. And this week, we have actually the same story. So if you'll take a look at the daily chart, initially it has seemed that indeed market could form something here with a starting drop and sharp reversal that market has reached the 1483 area. But later, as you can see, the situation has changed. And in fact, right now, we have the high wave pattern. High wave pattern, as you know, it's mostly indication of the indecision or some will taking the pause on the upward action. When investors take some time, take some rest for analyzing the position, analyzing the perspective, and then making the decision. And market usually follows in a direction of the breakout of the high wave. The problem is here that, take a look at the downside, hardly we will get the breakout in the coming week, just because, as you can see, market stands at the oversold. It corresponds to the bottom of the high wave. So with the daily oversold, if market even will touch it, hardly it will be broken significantly. This is the first moment. Second moment stands on the 4-hour time frame chart that shows that perspective of downside reversal are not really very obvious currently. And personally, I would even suggest the opposite direction. So take a look what we have. It's a bit surprising, but market indeed follows the shape of the diamond pattern, because it's not just drawing, here is the diamond. These two lines are the cloned lines, so they are parallel. And so what I have done is just clone the line and drag it right to this point. And market follows the level very accurately. So you can see first it hits this level, starts dropping, then I clone this line, move it in this point, and again market has hits this line and shows upward action. At the same time, we see that the MACD shows the bearish divergence and shows the bearish trend. But on the chart, we do not see this. We see the market is forming high bottoms, high lows, which by the Napoli terms means bullish dynamic pressure. This dynamic pressure suggests that market should show the upward spike and taken out of this top. Whether this will be a real breakout, the market will fall to some more extended targets, or it just will be a fake breakout, we do not know. But what we do know is that market probably should form another top before any signs of the reversal will form or something new will appear on the market. This is the very important observation. Finally, on the weekly chart, guys, we have some targets that stands in an area between the 1550, 1570. This is extensions on the weekly chart. There's two XOPs that also have not been hit. And combining these two moments makes us think that it's too early to take the bet on a real bearish reversal in the gold market. And every time when we deal with the high waves, and when the direction should follow on the breakout, we recall the same tool, using the stop entry orders for taking the position, taking the trading. Of course, the conservative approach in the current situation probably will be just do nothing. Just sit on the hands and wait for real patterns, real swings on the market that should be formed sooner probably rather than later. And as market shows really significant volatility, these swings probably will be great, and if retracement will follow, it will be more than enough for taking the position at the appropriate level. But if you still would like to trade the gold market, you trade it day by day, so you could try to think about this tool. So, as in the previous trading of the high wave on the euro currency, those maybe of you, somebody of those you maybe trade this. We could try to use the stop entry order. For example, here we could try to use stop buy order somewhere in this area that will be slightly below the top of the high wave on the daily, but above the diamond. So when diamond will be broken, but the high wave is not. In this area, we will not get yet the major swing, major breakout, but we will be prepared for taking out of this stop. And once market will break it up, that will let us to move stops to the break-even, and if it will be truth breakout, real breakout, we will be in the position. At the same time, the taking position here will be safer than trying to catch it inside of the diamond. So that is for upper breakout. For downward breakout, situation stands the same, but the problem stands with the daily reversal because it corresponds to, stands in agreement with the lows of the high wave. Theoretically, we could suggest the taking a short position stop entry order here, stop sell somewhere in this area when the market will break the diamond but will not break the high wave yet. But in the current circumstance, I would focus on the stop buy order just because on the other factors that we have. Uncompleted XOPs on the weekly chart. Here is existence of the bullish dynamic pressure makes us think that probably another upward action here is more probable, more possible. So that's what we see on the short-term perspective. That being said, on the gold market, we continue to keep an eye on the major patterns, major time frames, weekly, monthly, but currently still we can't get the necessary context for taking a longer term position. Until we will not get it, we will be focused mostly on the tactical steps that we have on the daily chart, on the intraday charts. Potentially, as you could see, the upward breakout could take the shape of the butterfly, maybe because actually it's really could be formed here. And I suppose that extension of this pattern could lead us right to some targets that stands on the weekly. So take a look indeed. 1568 is quite enough to complete the XOPs on the weekly chart. And as you understand, here is probably some stop stand. Once it will be triggered, the market could accelerate further. So don't be hurried with the taking short position. That's our major warning that we could make on the gold market right now.